Hey everyone, are you thinking about buying a house but not sure how to qualify? You're not alone. Qualifying for a mortgage is often the biggest hurdles for first time buyers. Maybe you're wondering if your credit is good enough or if you make enough money, or maybe you're just unsure where to even start. In this video, I'm going to walk you through exactly what lenders look for when deciding if you're ready to buy a house in Canada. We'll break down your credit, income, debt, and down payment, and even some mistakes to avoid that could kill your chances. By the end of this video, you'll know how to position yourself to get approved and move one step closer to holding those house keys in your hand. So let's jump in. Number one, what lenders look for. Before you even start house hunting, it's important to understand how mortgage lenders make the decision. They're not just handing out hundreds and thousands of dollars without doing some serious vetting. Think of qualifying for a mortgage like applying for a job. The lender is the boss and your financial profile is your resume. So, what are they looking at? It comes down to four main things. First, credit score, how well you handled debt in the past. Higher scores equal better results. Income, you need a steady, reliable income to prove you can afford monthly payments. Debt, your existing debt shouldn't eat too much of your income and savings. Lenders want to see if you've got enough down payment and a bit extra for emergencies. So let's start with credit score. One of the first things lenders will check. In Canada, credit score can range from 300 to 900. To qualify for most insured mortgages, especially those backed up by CMHC, you'll want a score of at least 680. Some lenders may go lower, but usually means a higher interest rate or tougher approval terms. The credit report comes from Equifax or TransUnion, and yes, you can check it for free. To improve your credit score, you can do the following things like pay your bills on time, keep your credit card balance below 30% of your limit, don't apply for too many credit card products at once, review your report for any errors or old accounts. A pro tip that I can give you is to use services like Borrowell or Credit Karma to monitor your credit score for free. Now, let's talk about income. One of the biggest factors in qualifying for a mortgage. Lenders want to see reliable, consistent income for at least the past 2 years. If you're salaried, this part is pretty simple. You'll be asked for recent pay stubs, T4 slips from the past 2 years, and maybe a letter of employment confirming your job title and salary. If you're self employed, expect a bit more paperwork. 2 years of notice of assessment from CRA, business financials or bank statements, and proof that your income is stable and recurring. Basically, your lender needs to feel confident that you can afford the mortgage not just now, but for the long run. Next up, your debt to income ratio, or more specifically in Canada, your GDS and TDS. GDS stands for gross debt service, which should be below 35%. That includes your mortgage payment, property taxes, heating, and half of any condo fees. TDS, on the other hand, means total debt service, which should be below 42%. That includes everything in your GDS plus car payments, credit card bills, student loans, all of it. So let's understand this with an example. Let's say you make $6,000 per month, and your GDS should stay under $2,100, and your TDS should stay below 2,520. If you go above these limits, lenders might reduce your approval amount or decline you altogether. Another thing you can do is pay off your high interest debt before you apply. It can seriously improve your approval chances. Now, one of the most important parts is your down payment. In Canada, your minimum down payment depends on the home price. For homes 500,000 or less, you need 5%. For homes between 500,000 to $999,999, you need 5% on the first 500 and 10% on the rest. So for example, a home that is $1 million or more, you can be expected to put 20% or more, no exceptions. Let's say you're buying a house for $750,000. So the first 500,000, you'll put 5%, which would be 25%, and 10% on the next 250,000, that would be $25,000. So the minimum total payment would be 50,000. If your down payment is less than 20%, your mortgage has to be insured through CMHC. That adds 2.8 to 4% of your mortgage. Not upfront, but added to the total loan. That means your monthly payment will be slightly higher. Now, the question that comes up is how to save for your down payment. So, there are three great Canadian programs that can help you with this thing. The first is RRSP Home Buyers Plan, where you can withdraw up to $60,000 from your RRSP tax-free or $120,000 as a couple and repay it over 15 years. There's another program by the name of First Home Savings Account, in short known as FHSA. It was introduced in 2023. You can contribute up to $8,000 per year with a lifetime max of $40,000. Contributions are tax deductible and withdrawals are tax free if used to buy your first home. Another account you can look up is the TFSA. Use your tax-free savings account for your down payment. There's no taxes on the growth and no repayment rules. You can also stack these tools to speed up your saving. Once your finances are in shape, your next step is to get pre-approved by a lender. A pre-approval gives you a clear idea of your budget, a locked interest rate of 160 to 120 days, and a stronger position when you're making an offer. You'll need to submit proof of income, that is T4s. You'll do a credit check, proof of down payment through RRSPs, and a list of existing debts. Don't skip the pre-approval. It shows the sellers you're serious and keeps you from falling in love with a house you can't afford. And remember, shop around. Talk to big banks like credit unions, mortgage brokers. They might be able to give you better rates or flexible options. When it comes to choosing the mortgage, choose the right one. Now that you've been pre-approved, let's talk about choosing some of the right mortgages. And there are four major choices you can make. First is the fixed versus variable. Fixed rate stays the same for the term, great for stability. Variable rate can change, starts lower but risky if the rate rises. Then there is the open versus closed mortgage. In closed, lower rates but limited to flexibility to pay off early. Open, on the other hand, gives you more flexibility but higher rates. Then there is insured versus uninsured. So insured mortgages, also known as high ratio mortgage, where the down payment is less than 20%, and that means you are by default required for mortgage insurance. And then there's the uninsured mortgage, which is 20% or more if you put in as down payment. And then there is no insurance required, so you have a bit more options. In terms of lenders, you can look at things like banks, credit unions, or mortgage brokers who can shop around in the market for you. Most Canadians go for closed fixed rate mortgage, but the right one depends on your comfort with your risk and your future plans. So far, I've spoken about things that we should be doing, but now some of the things we should not do. To protect your approval, do not make these common mistakes. So basically, don't switch a job mid-process. Don't take any new debt. Don't make any large purchases. No new car or furniture. Don't deposit large undocumented sums of cash into your account. And lenders recheck everything before closing. So keep your financial life stable until after you get the keys. Now, what happens after you qualify? That's another question that comes to mind. So once the offer is accepted, here's what happens next. The home goes into a conditional status. You're scheduled for a home inspector. You lender orders an appraisal. You submit your final paperwork. Your lawyer handles the title transfer and closing. Then you sign everything, pay your closing costs, and you get the keys. The entire process usually takes about 30 to 45 days. If this video helps you understand how to qualify for a house in Canada, smash that like button, subscribe, and drop your questions in the comments. I'll reply to every single one, and if you're looking to buy or sell in Surrey, BC, let's get in touch. Thanks for watching. Good luck on your path to home ownership.